Hello everyone. Um, with the same paper, you have been watching the videos, the paper um, discussions for some time now. Yeah, this is another part of the same paper. 2019 O-level paper, 2019 Business and Accounting. Second paper, sixth question. Sixth question, right? This is the accounting part, children. You know, accounting part has 3 questions. Fifth, sixth, and seventh. Paper 2. Sixth question. All right. What is a trial balance? That is what they ask you. What is a trial balance? What can you say about it? What is a trial balance? What is a trial balance? What is a trial balance? It's a statement showing the assets, liabilities, and capital as at a certain date. The the balances of assets, liabilities, and capital, right? Yeah. No. The balances of assets, liabilities, and capital of a business as at a certain date. That is the statement of financial position. In the trial balance, we just list down all the ledger balances as at a certain date. It is not a statement, it is not a final account or anything. It is just a list of balances. All right, so we'll write it down. List of balances. A list of ledger balances prepared as at a certain date. Prepared as at a certain date. Okay. All right. That's what a trial balance is. In some answers, you can actually mention that the trial balance is prepared in order to check the arithmetical accuracy of the ledger. You can say all these, but they are just asking for a definition. What is a trial balance? And you have only 1 mark for this question, A part. So don't take too much time. Okay, don't take too much time writing descriptive blah blah blah. Okay, write two accounting elements included in the statement of financial position. Wow, isn't that a surprise? Isn't that a surprise? That is not a surprise. That is a simple question. Write two accounting elements, the elements that are used when preparing the statement of financial position. That's right. Statement of financial position. What are the elements? Children, we are talking about the statement of financial position, right? Yeah. SOFP. What is used? What elements is included? Assets, liabilities, and capital. That's right. So you can write all 3 if you want. Write 2 accounting elements now. So we'll write 2. If you want, you can write all the elements assets, liabilities, capital. Okay, right, moving on to the second part, Roman number 2. Some transactions of Situm's business and how they have been recorded by a newly recruited accounts clerk are given below. Now we have some transactions here. Given transactions 5 to us. Yeah. How many transactions given to us? We have been given 1, 2, 3, 4, 5. Righto. What do we have to do? There's nothing mentioned here. Let's go and see on the next slide. What is the question, huh? And we have some ledger accounts. Oh yeah, we have ledger accounts, no? See, they say some transactions of Situm's business and how they have been recorded by a newly recruited accounts clerk. Okay, the transactions are recorded by a newly recruited accounts clerk, which means these transactions must have been recorded in the ledger accounts with mistakes, with errors. I'm sure that is the case. Because when they say how they have been recorded by a newly recruited accounts clerk. Recorded by a newly recruited accounts clerk. The newly recruited accounts clerk or the bookkeeper is a training bookkeeper, newly joined to the business. No experience, maybe no less knowledge about the bookkeeping and recording transactions. These type of newly recruited ones, they make mistakes. All right. So I'm very sure in these accounts there must be some errors or mistakes. Ledger accounts are given. All right, ledger accounts are given. We have cash account, capital, purchases account, and electricity bill account. Required. Let's see what is required. What is required? Writing errors occurred with values. Told you, right? Did I tell you? Did I tell you or not? Didn't I tell you? I did. They are asking us to locate the errors in these ledger accounts when recording the above transactions. Then we have the journal entries to rectify. We have to correct those errors. That's what we do now. We correct others' errors. We go to correct others' errors. Sometimes we make so many errors, mistakes ourselves, but we locate others' errors and we go to correct them. Well, that is some general points for your life. Don't go to correct others' errors. Show them their errors, but focus more on your personal, errors or mistakes or, shortcomings you have. You correct them before you go to correct anyone else. But here we have to correct errors of someone else. Let's go and see the transactions and how they have been recorded by this clerk. How they have been recorded by this clerk. First transaction, number 1. First March. Employing additional capital of 50,000. Employing additional capital of 50,000. What is the double entry? Employing additional capital. Who is employing additional capital to the business? The business cash. Do we spend? We are the accountants of this business, Situm's business. We are the accountants. You are the accountant. what happens with this first transaction? We get cash. Owner brings in cash, right? Cash comes in. We get cash. Cash account debit. Capital account credit. Cash debit. Capital credit. Because the money was brought to the business by the owner, so his capital increases, cash also increases. Let's see how this have been recorded. Cash debit 50,000. Cash debit 50,000. Okay. Cash is debited 50,000. Cash is debited 50,000. It's done. Capital is credited 50,000. So the transaction is nicely, perfectly done. No problem. This is done. Double entry is correct. Cash debit, capital credit. Next transaction. This is okay, huh? Second transaction. Purchases on credit 45,000. Purchases on credit 45,000. Purchasing goods on credit, not paying cash. Okay, purchasing goods. So goods come into the business, goods increase, purchases debit, creditor credit. Purchase debit, creditor's account credit. Let's go and see. Where is the purchases account? It's here. But what is the amount? Purchases on credit 45,000. Where is this 45,000? Where is it? Where? Oh, where? Where is this 45,000? Where? It's not there. 45,000 is not there. Purchases is not debited with 45. Where is the creditor's account? Creditor's account must be credited. There is no creditor's account. There is no creditor's account. In the purchase account, there is no purchases. That 45,000, it's missing. Yep, it's an omission. It's an omission. Okay, the transaction is completely omitted or forgotten or missed. It has not been recorded. That is the first error. Let's write it down right here. Purchases on credit 45,000. Transaction not recorded. Transaction not recorded. Omission. Omission. Yeah. Now we located one error. Let's it's better to mark and keep everything precisely noted. Easy. Now the third, paying electricity bill 8,000. Paying electricity bill. When you pay electricity bill or whatever the expense that you pay, cash is credited. That expense account is debited. Cash credited, electricity bill debited. Let's see cash, whether it is credited with 8,000. Cash, electricity is the description, credited by 8,000. That's correct. It's correct. Cash account is credited with 8,000. Where is the electricity bill account? Oh no! There's another error. Electricity bill account is not debited. it is credited. It is credited. See, electricity bill account should be debited, but it is credited. That is wrong. Both accounts are credited now. See, electricity bill account also has been credited with 8,000. Cash book also credited 8,000. See, that is wrong. Electricity bill account should be debited. So we can mention it here. There is an error here. This 8,000 is credited in electricity bill account. Credited in electricity bill account. See, that is the mistake, that is the error. It's debited in the cash book, but sorry, it's credited in the cash book correctly, but again credited in electricity bill account. So you can say electricity bill paid is credited both in the cash book and in the electricity bill account, and that is error. Next one, this is also error. Purchases of furniture 12,000. Purchases of furniture 12,000. Let's see. Purchases of furniture 12,000 means, children, purchases of furniture, when this transaction when this transaction is recorded, it should be debited to the purchases account. No. It should be debited to the furniture account. Purchases of furniture, no. You only debit purchases of goods, purchasing of stock. Only purchasing of stock you debit to the purchases account. This is a purchasing of a non-current asset, not goods. See, it's purchasing of furniture. Furniture is a non-current asset. Okay. This is a non-current asset. Non-current asset. Non-current asset purchases are not debited to the purchases account. Should be debited to the asset, that relevant asset account. So furniture debit, cash credit. Let's see. Cash credit, furniture, that is done correctly. Okay, this is done correctly. Cash credit. Okay, why the furniture account? Where is the furniture account? Where is the furniture account? There is no furniture account. Furniture account should be debited. It is debited to the purchases account. See, man. It is debited to the purchases account. That is wrong. It has been debited to the purchases account. Just the same mistake I was explaining a few seconds ago. You don't debit to the purchases account when you purchase non-current assets. No, you don't debit to the purchases account. You debit to the relevant non-current asset account. So in this case, furniture account. Debit to the furniture account. It's not done. They have debited to the purchases account. So this is wrong. This is wrong. Okay. This is wrong. Okay, debited to the purchase account. It's wrong. What we have to write here is, this is also wrong, so we will circle it and we will write here. We should write purchases account has been debited instead of furniture account. Instead of furniture account. Got it? Next one. This is also wrong. Fifth one, sales in cash, 30,000. Sales in cash, selling goods for cash. That is what the transaction says. Sales in cash. So what you have to understand is goods are sold for cash. So cash comes into the business, right? Cash debit, sales credit. 30,000. Let's check the cash account. 30,000 is done. Cash account debit, 30,000. It's done right here. Sales account should be credit. No sales account. Where is the sales account? Where is the sales account? No sales account. That is also wrong. Only recorded in the cash book. You have to write that. Sales. Only recorded in cash book, not credited to sales account. There you go. We located the errors. Now you have to write the errors one by one. How do you like that? Writing the errors one by one. This is also wrong. This is wrong too. Last 2, 3, 4 and 5. Last all the last transactions instead except the first transaction. All are wrong. Let's go and see what the question is asking us to do. Writing errors occurred with values when recording the above transactions. We have to write errors. Now we already wrote, yeah. So is it a good idea to write the errors again here on this slide? No, it's a waste of time. We just wrote all the errors. Okay, I will go back to those errors and advise you on how to write. There are many ways to write. When recording about transactions, writing errors occurred. Right. There you go. Now, purchases on credit, 45,000. Transaction not recorded in accounts. Okay, or else you can say complete omission. You have to write complete omission. You have to write that. You have to write complete omission of transaction. How do you write it? Complete omission. That's how you write. Either you write transaction is not recorded, transaction is not recorded. Transaction is not recorded in accounts. Or you write complete omission of transaction. Second, paying electricity bill. It's right here, paying electricity bill, 8,000. The error is credited in electricity bill account. You have to write the electricity bill paid has been credited in cash account correctly, but credited to electricity bill account. Or else you can write transaction is credited in both accounts. That is how you write. Next one. Next one is this one. Fourth one. Purchases of non-current asset furniture. What is the error? Purchases has been debited instead of furniture account. You have to write like this. Purchasing of furniture has been debited to purchases instead of furniture account. Okay. Next one. Last. Sales in credit. Sales on credit. 30,000. Only recorded in cash book, not credited to sales account. You have to write only the transaction is recorded only in cash book and not in sales account, not credited to sales account. Or else you can write omission of one entry which entry is missing. Omission of credit entry in sales account. Voila, done. Yeah, no need to rewrite, it takes time. Let's go and check what else we have to do. Journal entries to rectify any two errors mentioned above. You have to write journal entries to rectify any two errors. Any two errors. So you have to go and select any two errors and write journal entries to correct them. Write journal entries to correct them. Okay, we'll draw the journal here, shall we? No, I'm not gonna take a long time for this, okay, because drawing tables, drawing statements or accounts or whatever, you can't take a long time to draw or rule accounts. It's a waste of time. Okay, don't waste your time with rulers and trying to rule the accounts exactly, precisely, erase the lines and draw again with the ruler exactly like right. parallelly, those things take a lot of time. If you are like trying to draw the accounts and your tables and the statements, the ruling part, structures, if you are trying to do them perfectly, those things take time. Don't take too much time. Just write the important stuff like the headings and all. If your lines are a little, not very straight, it doesn't matter. Date details, ledger folio, debit, credit. This is the general journal. Let's select any two errors. What errors do you want to select? Transaction is not recorded in accounts. Oh, complete omission. That's a simple one. It's a very simple one. It's a very, very simple one. Transaction is not recorded in accounts. It's not recorded in accounts. You just have to record the transaction, the double entry. Then the error is corrected. It's easy, no? I'll take another one. Paying electricity bill. Credited in electricity bill account. Or you have to write both accounts credited. That is another way of writing the error. Electricity bill paid is credited in electricity bill account. Or electricity bill paid is credited in both accounts. Credited in both accounts. You have to write likewise. How to correct that? If electricity bill account is also credited, okay, that is the error, no? Credited in electricity bill account. That is the error, no? Credited in electricity bill account. Electricity bill credit means that there only the error is there. In the electricity bill account only the error is there. Okay, we can say credited in both accounts. That is also correct to write that way. Now we'll correct the error. Credited in electricity bill account means that place, the electricity bill account only error is there. Okay, so if it is credited in error like this, you have to debit it. You have to put the 8,000 to the debit side to correct that error. So debit the electricity bill account. What is the double entry? This is error number 2. Is it? No, that is 3. We are taking 3, third one. This one. We are taking this one, all right? We are going to correct this one. We are going to correct this one. Paying electricity bill 8,000. Error is, it is credited in the electricity bill account. How to correct the error? How to correct the error? You have to debit it in the electricity bill account. Debit it in the electricity bill account. So electricity bill account. Electricity bill account debited 8,000. Now is that correct? Is that correct? What I said, I was, when I was explaining, I said this very clearly. No, if the electricity bill, the error is, if the error is in the electricity bill account, you have to correct that. What is the error? Electricity bill account is credited. That is the error. This is the error. So you debit. Now it's corrected. It's so easy, no? Oh, such a simple thing, man. It's wrong. If you debit this 8,000, when the electricity bill account is credited, if you debit another 8,000 to correct that error, to this 8,000, the error, 8,000 which was credited, gets cut off. You got it? Did you get what I'm saying? To this 8,000, this 8,000 will get cut off. Now it's like nothing is entered in the electricity bill account. So what you have to do is, you have to enter how much? You have to enter how much? 16,000. 16,000. Here you have to enter 16,000. Then 8,000 will get cut off to this 8,000, and the remainder is another 8,000. It will be in the debit sign. So debit entry is already done. What is the credit entry? Oh no, it goes to the suspense account. It goes to the suspense, because there is no other account to credit. It goes to the suspense account. Write the narration. Write your narrations. Don't just do your journal entries and forget the narration. Write the narration. Corrected the error of crediting the electricity bill account. Corrected the error of crediting the electricity bill account. Yeah, that's what we corrected. Another one. Okay, this is done. This is done. This is done. Another one. Shall we take this one? Fourth one. Purchase of furniture, 12,000. What is the error? The error is purchases has been debited instead of furniture account. Instead of furniture account, furniture account එක වීමට බැරි වෙලා by mistake. Purchases account debit. It is debited. See? So to cancel this off, credit the purchases account. You don't double the amount like before, because you don't keep any remainder here. You just cancel this off, 12,000. So purchases account credited 12,000, and you put that 12,000 to the right place. Purchases credit 12,000. Furniture debit 12,000. That is the double entry. Furniture debit. Debit 12,000. Furniture debit 12,000. Purchases credit 12,000. That's it. Write your narrations and we are done. Write your narrations and we are done. Don't forget your narrations, okay? Are we finished? Over with this question. Let's see. Well, this is the second part. We have few more to do. Third part. Nirmal started business to produce and sell flower vases by using used plastic bottles. That's a very environmentally friendly business, isn't it? Yeah, very thoughtful, no? Following are the information related to the month of May. Nirmal started producing flower vases using used plastic bottles. So what is the main material used for the vases, flower vases? Used plastic bottles. You know, plastic bottles, when you go to a place, a public place, you see these type of plastic bottles lying everywhere, littered. Not only in the garbage bins, everywhere on the road you see these plastic bottles, you know, mega bottles and stuff, water, mineral water bottles. Our people are such, you know, thoughtful, such environmentally friendly people in our country, and they just drink and throw it to the street corner, or they just drink and throw it to the nearby bush. Huh? What do you think? The bush is a recycling machine. You have to recycle the plastic that you use. Don't be stupid. All right, be sensible. Don't litter. Don't put your garbage everywhere in the environment, into the natural environment. You release your garbage. You are an idiot. Okay, just mark my words. I use those words specifically. This guy has done such a environmentally friendly thing. The environment, the natural environment, the trees, the soil, Mother Earth, the wind and the sun, and the water. You have to protect them. Otherwise, you and I, we are going to die suffering. Just a, you know, general tip for your life, for everybody's lives. This guy is producing flower vases using used plastic bottles. Environmentally friendly, very creative, very thoughtful. He has purchased plastic bottles. He's paying wages of flower vase maker. He's painting cost of flower vases this much. His electricity charges this much. He's purchasing cost of flower vases making machine. Okay. Remember children, this item should not be included in your production cost statement. I think this question is about a production cost statement. Additional information, I'm just telling you not to include this. Not to include this in your production cost statement. It's a non-current asset because it's a non-current asset. Additional information, depreciation is there. 100 flower vases were produced during the month of May. Okay. Preparing the statement of production cost for the month ended 31st. Any other questions? No, no other questions. You just have to prepare the statement of production cost. Let's draw it first. There is not much of a format here. It's a simple, very simple one. Details column, 2 amount columns. That's it. Whose business? Nirmal's business. For the month of May. Nirmal's business. Nirmal. Statement of production cost. For the month of May. For May, I'll just write for May. You have to write for the month of May. Okay. Okay. Now we are preparing it. Take purchasing of plastic bottles 13,000 as the direct materials. Take wages of flower vase maker as direct labor. You know why. The main material or the material which is clearly visible in the final product. You know, when you take a flower vase, you can clearly see that the flower vase is made out of a plastic bottle. So what is the main material you used to make that? Plastic bottles. That is the direct material cost. So direct materials 13,000. That is this one. Purchase of plastic bottles taken. Wages of maker of flower vases 6,000. This is the direct labor. The laborer who is directly involved in making the product is the direct laborer. Then flower vase maker is the direct labor cost. Wages of flower vase maker, direct labor cost, and that is 6,000. Wages of flower vase, wages for the maker of flower vases 6,000. Painting cost of flower vases 2,500. That is a material too which is used in the production, but not the direct material, so that goes as indirect materials. 2,500. Indirect materials, paint 2,500. That is also taken now. Electricity charges should also be taken. That is an indirect other cost. Indirect material, indirect labor not given. Indirect labor is not given, right? Indirect labor is not given. Indirect other cost is the what? Electricity bill. Indirect other expense is the electricity bill. How much was that? Electricity charges 3,000. You have to include that. 3,000. Indirect labor not given. Right. Is that all? Is that all? Really? Is it all? Is it all the information that you should include in this? No, there are some additional information. We didn't check the additional information. Have to check the additional information. See, man. Machine should be depreciated annually at 10% on straight line method. All right, now. I very clearly told you not to take the cost of the machine. 60,000. Don't take it. It is a non-current asset. It is not a production cost. Production cost. It is not a production cost. It is a non-current asset. Okay, but the production cost is depreciation. Depreciation 10%. Apply 10 over 100. Answer is 6,000. That is the annual. Machine should be depreciated annually. This is the annual depreciation. Don't put the 6,000 to your production cost statement. Divide it by 12. How much do you get? You get 500. This is the monthly cost. Monthly depreciation. So depreciation. Oops, indirect other expenses, you have to write electricity, no? You have to write electricity expense 3,000. Then under that depreciation. $500. Extend the lines a little bit. Yeah. Okay. Now, children, what is the next additional information? Yeah, this one. By using all materials, 100 flower vases were produced during the month of May. That is not actually a production cost item. That is about the number of units produced. By using all materials, 100 flower vases were produced. No closing stock, right? No closing stock of raw materials. No closing stock of plastic bottles left. Okay, all the plastic bottles has been used. That is what you have to take from that information. This is the thing you must realize by this given information. Okay. Done. That's it. We don't have to find the unit cost even. Now we can calculate. Take the prime cost. Take the prime cost, children. Take the prime cost. 13,000 plus 6,000. It's 19,000. Plus 6,000. It's 19,000. Prime cost. Okay. 19,000. Take the overhead cost, all the indirect costs, addition of all the indirect costs. Indirect material, paint 2,500 plus indirect other 3,000 plus 500, 3,500. 3,500 plus 2,500, 6,000. What is the total production cost? Total production cost is $19,000 plus 6,000, 25,000. That is the total production cost. That's it. Well, the question is so easy. There's no challenge in this question. You don't even have to calculate the unit cost, no? Yeah, that's it. Just prepare the statement of production cost. Just prepare the statement of production cost. And we did for the month ended 31st May. Okie dokie. Can you see this fully visible? All right. All right. You have to write prime cost 19,000, and for the 6,000 you have to write overhead cost. I didn't write it here because of the space shortage of space. You have to write for like this 9,000 is the prime cost. Like this 9,000, 19,000 is the prime cost. This 6,000 is the overhead cost. Okay, you have to write like this. You have to write here overhead cost and put 6,000 down. That's what I told you. Overhead cost 6,000. Then the statement is fully, perfectly complete. Total production cost is 25,000. Done deal. We have only one part left. Following are the information extracted from the bank statement received for the month of Sam's business. Credit balances. Credit balance. This is the opening balance. Yeah, see, opening date of the month. First date of the month. Yeah. Because of that, you have to realize that is the opening balance. Deposits, we have 20, 22, direct remittances 15. Then deductions, we have wages paid, this is the check, bank charges. Wow, what do we have to do here? What is required to do? Preparing the bank statement for the month of March. You have to prepare the bank statement, not the bank reconciliation statement. Yeah, you have to prepare the bank statement. Now, this is something different. Normally, we get to prepare the bank reconciliation. Normally, we get to prepare the bank reconciliation, right? But here, we have to prepare the bank statement. Yep. Name an item from the above information that is used. Name an item from the above information that is used to adjust the bank account of the business. Okay. In this question, I need to make this point. I need to bring this point to your notice. Notice this point. Like I said, bank reconciliation is not to be prepared. I mean, they haven't asked us to. They haven't asked you to prepare the bank reconciliation. They have asked you to prepare the bank statement. It's a different way of giving this question. Normally, a question like this comes related to bank statement and bank account. A question like this comes is given to prepare the bank reconciliation. Okay, let's prepare the bank statement for the month of May. Here children, I want you to notice that the bank statement is prepared. The bank statement is prepared according to a method or according to a system called the running balance method. Okay, the bank statement is prepared according to a method called running balance method. According to running balance method, you should prepare the statement in this kind of a table. This is the format of the running balance method. Okay. Now, this column is for the date. This column is for the date. Then we get details column. Then we get debit column. Mark these points. We get debit column and credit column. I'll use two colors for those. Debit column and credit column. This is the point to remember. Key point. You are preparing the bank statement. I sound very serious. You are preparing the bank statement now. I should be serious. Take this point. It's a serious point. Should be serious. You are preparing the bank statement now. When preparing the bank statement, children, this is prepared from the bank's point of view by the bank. By the bank. Got it? This is prepared by the bank. By the bank. So, the bank usually records the transactions which has happened through the bank account, through the business bank account in this manner. In this manner. How? They debit the withdrawals. They debit the withdrawals and credit the deposits. So, deposits are credited. Okay. Withdrawals or cash taken out, credited, debited. Withdrawals debited. Can you see? Can you see? You have to make this point, keep this point in your mind, let it, push it, force it to your head. You might get to prepare a bank statement in your exam. Withdrawals are debited. From the business point of view, this is the opposite. This happens. This is happening. This happens in the opposite way. In the business point of view, we debit cash deposits and check deposits. We debit. And we credit cash withdrawals or cash outflows. We credit. We debit deposits, credit cash withdrawals. But they credit deposits. Okay, and debit withdrawals. Okay, even I can't read it, but now that I have explained you what is here, you have to just note it. Withdraw. I'll just write withdraw. Okay. Okay, done. Now, What is the last column? The running balance format. In the running balance format in this system, we have a last column also. What is this column? This is the balance column. This is the balance column. Balance. After each and every debit entry, you have to put a balance. After each and every credit entry, you have to put the balance. Okay. First of all, let's write down. Let's enter the opening balance. All right. All right. Where is the opening balance? Here is the opening balance. I have written opening balance. See, credit balance. It's a credit balance. 1st March 2019, 11,000. Credit balance means, first of all, 1st March 2019, balance brought forward is the description. No debit entry, no credit entry. 11,000 straight away in the balance column. Straight to the balance column. You have to mention credit in the balance column because in the balance column you have to mention which side you have the balance. Here it is mentioned, no, children, credit balance. See, so you have to mention the balance column that the balance is a credit balance, 11,000. Okay, now you can't directly record all the deposits here into the credit side and record all the deductions or withdrawals to the debit column. No, you can't do that. You have to go according to the date, right? So this is a little tricky. It's a little tricky. Let's number according to the date. Let's number the entries. Number 1 is this. Number 1 is this. Okay, this has happened on the 2nd March. Then there is another entry on 5th March. But check below, 4th March also there. So 4th is the 2nd entry. 5th is the 3rd entry. Then 15th is the 4th entry. 25th is the 5th entry. 30th is the 6th entry. According to this date order of the dates, you have to record. Don't just put deposits first, then deductions. These items below. Can't do that. Enter the first one. 2nd March. Cash, 20,000. It's a deposit, so it should be credited. 2nd March. 2nd, 3rd. Cash deposit. How much should be credited? How much? 2nd March. Cash deposit. 20,000. 20,000. After each and every entry, you must calculate the balance and put the balance to the column, last column. So 11,000 plus 20. Why do you plus? Because cash has come in. This is the balance or amount of cash at the beginning. The money in the account at the beginning. This is the balance. This is the balance. Money balance. You don't understand that. That's why we mention it as the balance brought forward. See? So that is the cash in the account, and 20,000 again gets added. Then the balance becomes 31,000. Credit. Yes or no? 11,000 plus 11,000 plus 20,000. It becomes 31,000. 1,000. Are you clear now? Let's finish this off. Next, this is done. First entry is done. Second entry is right here. It's a deduction. 4th March, wages check, 10,000. 4th March, wages check. You don't write wages because the bank doesn't know we have issued the check for wages or for electricity bill, or the check is brought by the person, whether he's a creditor or they don't know. The bank doesn't know. So the bank, in the bank statement, you don't have to mention that. You just write check and check number 352301. 352301. How much? 10,000. And that should be debited because it's a withdrawal. 4th March, check 352301, 10,000. 352301, 10,000. Now, from this 31,000, this withdrawal gets subtracted. It gets. Do you understand or not? Tell me very clearly. Tell me. Why this, from this 31,000, this 10,000 is deducted? Why? Because money is taken out from the bank account. Money goes out. It's an expense. It's a cash withdrawal. Money goes out. So 31,000 minus 10,000. Balance becomes 21,000 with this transaction. Credit. Got it? Next. 1, 2, 3 here. 5th March. It's a deposit. Check 758011. 22,000. 758011. 5th. Check deposit. 758011. 22,000. No, not in the debit column. In the credit column because it's a deposit. Cash goes into the bank. Deposit. 758011. 22,000. Now this gets added again because money has come in. So it's a plus. 21,000 plus 22,000. 43,000. The balance becomes 43,000. Credit. Okay. Clear now? Now it's clear now? Yeah, we are done with this. $22,000 done. 4th entry here. 15th direct remittance, 15,000. 15th direct remit should be credited 15,000. Isn't it? Isn't it? No. Yeah, 15,000. Done. This is also done. Taken. 15,000 taken. 4th taken. 5th is here. Tusita check. It's a deduction. It's a withdrawal. We have issued a check to Tusita and he has taken money. It's a withdrawal. It's a deduction. Deduction. So let's use red color for that. Take this one. 25th check 352302. 25th. Check. 250322. 20,000. Oh, see, don't put to the credit column. Don't credit it. It should be debited. 20,000. Just make sure the check number is correct. 352302. 20,000. 3523. 352302. Okay. Yeah. I'm sure that it's correct. 35230. 352302. It's correct. 20,000. Okay. Now we haven't put this balance. See, 43,000 must be added with this. Must be added with 15,000. 43,000, 53,000, 58,000 is the balance. 58,000 is the balance. Still, it's a credit balance. Now, this should be deducted because it's a withdrawal. It's a deduction. 58,000 minus 20, it's 38,000. The balance here gets 38,000. Okay? Got it? Are we done? No, fifth one we took. Sixth one is here. 30th, last one. 30th, bank charges 3,000. We know that bank charges go to the debit because it's a withdrawal by the bank. 3,000. Again, 38,000 minus 3,000, 35,000 is the last balance. It's a 35,000 credit balance and the bank statement is done. There you go. If you want, you can again cross-check with the question. All the entries items are taken. All the items are taken. This is also taken. And we prepare the bank statement for the month of March. You have to name it. Name the bank statement. Name the bank statement, children. Name it. Name it. Bank statement for the month of March 2019. 2019. Got it? Done. That is the end of it. And we are done with the question. Go back and see the fourth part, third part, and the second part also done. Sixth question of 2019 O-level paper. I'm going to see you soon with the seventh question, the last question of this paper. All right, work out, not at the gym. If you want, you work out at the gym too. That's good. Do your papers. Do the questions, paper questions, like working the papers. You can watch me do that and do it by yourself. That's why I always say work hard, play harder. I'm gonna see you with the next question. Thank you for watching. See you soon.